Money feels solid because you can touch it, but debt controls reality invisibly. That invisibility makes debt more powerful than anything you can see. Money looks real, yet debt quietly decides how the system moves. Debt does not follow economic rules. It creates them. Modern money is born from borrowed obligation, not from completed work. Without debt, modern money would simply stop existing. Banks do not lend savings. They create money by issuing loans. Every loan begins as a promise to repay something that never existed before. Each dollar in circulation starts as someone else's liability. Debt enters the economy before real value is produced. Repaying debt destroys money, while borrowing creates it. The system depends on continuous borrowing to survive. When debt expansion slows, economic growth weakens immediately. Weak growth quickly undermines confidence. Confidence loss threatens the entire financial structure. That is why debt must always keep expanding. Governments borrow to delay political consequences they cannot face. Corporations borrow to inflate growth and satisfy markets. Consumers borrow simply to survive rising living costs. Debt connects every layer of modern society into one structure. If everyone repaid debt simultaneously, money would vanish from circulation. Responsibility at scale would collapse the economy. Debt is not a flaw. It is the fuel. Fuel must burn continuously for the engine to run. Debt is designed to roll forward, not to end. Permanent obligation is more useful than repayment. Inflation quietly reduces the real burden of debt over time. Savers lose value slowly, often without noticing. Borrowers benefit as prices rise and debts shrink in real terms. Debt transfers wealth without visible force or violence. Debt is a claim on your future labor and time. You exchange tomorrow's effort to survive today's expenses. Debt guarantees participation without physical coercion. Obligation replaces chains and guards. Debt disciplines behavior automatically. Credit scores reward compliance and punish resistance. Debt cannot be ignored, paused, or refused. Money can be hidden. Debt always follows. Debt tracks your behavior across your entire life. This makes debt more powerful than money itself. Crises begin when debt becomes impossible to service. Defaults reveal fragility hidden beneath years of growth. When debt fails, economic rules immediately change. Losses are socialized to preserve debt structures. Institutions are rescued while individuals absorb adjustments. The system survives by protecting obligations, not people. Crises do not remove debt, they reinforce it. Each cycle requires larger debt injections for smaller growth. Growth becomes addictive, demanding higher doses each time. Withdrawal is never allowed without collapse. Debt stops being a tool and becomes infrastructure. Everyday life is financed instead of earned. Subscriptions normalize permanent obligation. Buy now, pay later becomes default behavior. People are paid in access to debt, not freedom. Income determines how much you're allowed to owe. Productivity rises while wages disconnect from outcomes. Ownership beats effort in leveraged systems. Debt amplifies advantages for those closest to its creation. Distance from debt creation determines winners and losers. Money is what people see every day. Debt is what actually decides outcomes. This explains modern inequality more clearly than effort ever could. This explains endless work without security. This explains why exits feel impossible. You are not meant to stop participating. You are meant to roll forward indefinitely. Stability requires constant borrowing. Calm populations threaten leveraged systems. Stress keeps participation guaranteed. Debt transforms citizens into predictable economic units. Predictability matters more than prosperity. Freedom is incompatible with permanent obligation. Debt turns future choices into fixed paths. Time becomes collateral. Hope becomes conditional on credit approval. Economic growth continues while personal security declines. The system grows stronger as individuals feel weaker. Debt concentrates power without visible authority. Authority becomes mathematical instead of political. Rules feel neutral when enforced by numbers. Algorithms replace human judgment. Interest rates quietly guide behavior. Defaults punish deviation from expected paths. Debt integrates resistance back into the system. Even rebellion becomes monetized. Debt ensures no clean exit exists. Participation becomes mandatory without force. This is why debt replaced money. Money can be refused, debt cannot. Debt scales better than trust. Debt survives crises better than currencies. Debt adapts faster than regulation. Debt is flexible, expandable, and enforceable. That makes debt the perfect control mechanism. Money distracts from this reality. Debt quietly governs. This is not a conspiracy. It is structural design. Debt is the new currency.